Thank you guys so much for tuning into today's video. Today is February 4th, 2025. And to start off today's live stream, I do want to take a look at the news today. We have at 10 a.m. Joe's job openings, and President Donald Trump is speaking at 5:10 p.m. today. So that news doesn't really affect New York AM session right now, but to begin the analysis here today, I do want to take a look at the daily chart, right? So this is a daily candle from previous day, and based on how we closed on that daily candle, I was anticipating for us to take out the daily candle's high, and it turns out that once we opened up at 6 p.m. I guess yesterday, we took out previous day high and we have completed the daily objective. So now coming into this morning session here, I can no longer rely on the daily time frame for some sort of bias, right? Because it's already been, the objective has already been completed. So this morning I do want to rely on, the 8-hour time frame, which is that candle right there, and I want to rely on this 4-hour candle. So both this 4-hour candle and this 8-hour candle will be my morning bias or morning objective here, depending on how we close, which is in about 26 or so minutes here. If we close, like if we create a bullish up close candle, then I'll anticipate for prices to take out previous 4-hour high or previous 8-hour high. Or if we create a bearish 4-hour candle / 8-hour candle, then I'll be targeting the low. But like I said, we have about 26 or so minutes, so I'm just going to relax and just sit on my hands here. There's really no need for me to force a model onto the markets as of right now. On the weekly time frame, I should have started off with that, but on the weekly time frame, I didn't necessarily have a bias, and we also gapped down today or this week, which is kind of interesting, and I believe that's due to tariffs that were implemented by Trump. But yeah, I can't rely on the weekly time frame for a bias. Also there's monthly time frame as well. So both the weekly and the monthly they don't really have a clear objective. So I can't rely on these two time frames. And so the time frame I was relying on, the daily time frame, its objective has been completed. So daily, weekly, monthly, I can no longer use coming into this morning. But yeah, that's kind of basically all I do have for, I guess, as of analysis coming into this morning. Same thing here on ES as well. We have completed the daily objective here. So this daily candle here, to make it a little bit simpler, it's objective, right? So like notice how it's a close candle. It's pretty bullish. The bare minimum that you can anticipate for prices to take is that previous day high. And a more objective way of looking at it is, so this is the close of yesterday, right? So I'm going to denote that by a red line. And this is the low. And the low, I'll make that a purple line. So essentially, is the red line closer to the blue line or the purple line? In this case, in this candle here, previous day candle on ES, the red line is closer to the blue candle, which I can interpret to be as we're most likely going to take out previous day high. So that's essentially what I do to every single candle, right? You can apply that same theory to this 4-hour candle right here. Or if you want, you can go on to the 1-hour time frame and you can apply that concept to the same to the candle right here. Every single candle has an objective. And that whole idea just comes from the idea that prices is fractal, right? Refer back to when ICT states that if you're able to view a 4-hour candle as if it's a daily candle, your world's going to open up, right? So if you break that down, basically what he means by that is that prices is fractal. You can apply the same concepts, power of 3, to every single candle. Not only am I applying this to the daily time frame and the 4 hours and the hourly time frame, but I'm applying that to the weekly time frame as well and the monthly. Let's take a look at the 12-month candle here. So this 12-month candle here, I am anticipating for the 12-month high to be taken, right? So this high, all-time highs, I'm anticipating for prices to take. Is it efficient for prices to, take out the low and then take out its high? No, that's not efficient. I'm anticipating for us to open here, manipulate, and then take out the monthly high, or the yearly high. But yeah, that's essentially what I am looking for coming into today. This is more yearly time frame, so this is like the higher time frame scopes of things. But that just shows you how fractal prices can be, right? I'm applying the same concepts to the yearly time frame, to the monthly time frame, to the weekly time frame, to the daily, to the 4-hour, to the 15-minute. This concept is fractal. But yeah, like I'm going to restate again. My morning objective, I don't have a morning, I guess I don't have a morning daily bias, so I have to use the intraday time frames for a morning objective. With that in mind, I do want to go over the pros and cons here with you guys. So from last week, some of the things that I should continue to do is taking consistent models, right? Every single trade that I take, I should be able to identify what my higher time frame objective is. I should be able to identify what my model and what my entry pattern is going to be. If all three of those components if all three of those components are met, I should be able to press the button, right? And this idea of practicing consistent models is only going to benefit me in the long run, right? Because I have because I'm building on my understanding of what these concepts mean and how I interpret it. It keeps the models and the trades that I take. It's not the similar, but it's backed by the same logic, right? In every single trade. Higher time frame objective. The higher time frame objective is essentially, why should prices continue in a certain direction after completing a model's objective? And this is, I can show you guys or explain this concept with an actual review of a trade. But yeah, second thing here coming into this week that I should be continuing to do is fully grasping the idea of time frame alignment. Time frame alignment is essentially it's from this trade here from last week, right? So the trade that I took last week, or one of them, I was anticipating for higher prices. The reason being, based on this 6-hour candle here, I can anticipate for the 6-hour high to be taken, right? It's a pretty up close, it's a bullish 6-hour candle. I'm anticipating the 6-hour high to be taken. It's pretty simple, but that's just one component, right? Now my second component to a trade is a model. So notice how when this 6-hour candle closed, I'm anticipating bullish price action for the next 6 hours or within the next 6 hours. However, the hourly time frame here, this hourly candle is suggesting to me that we're most likely going to take out the hourly low. So within the next hour, I should anticipate lower prices, but in the macro sense of things, I want to see higher prices because the 6-hour time frame is suggesting bullish price action and the 6-hour is dominant to the 1 hour. But the whole idea is that the time frames, the hourly and the 6-hour time frame, they're not in alignment with one another, right? So if they're out of sync, you have to wait, you have to sit on your hands, you have to wait for structure to play out. So when I notice this, I'm simply telling myself, okay, because the hourly time frame is telling me that we're going to that we could continue lower, I'm just going to wait until a hourly candle matches or aligns itself with the 6-hour order flow. So in this next slide here, you're going to see. So after 3 hours or so, we create this bullish up closed hourly candle. So now that the hourly time frame is aligned with the 6-hour time frame, it makes sense for us to complete the 6-hour objective right now. So for me, this trade here is based off of the 6-hour order flow, which is higher prices, and my model is going to be on the hourly time frame because it is now in alignment with the 6-hour time frame. And notice how we create this 6-hour candle here. We have this 6-hour fair value gap, right? And prices never completely disrespects it. We closed below the consequent encroachment, but we never closed past the fair value gap. So this means that prices is still technically respecting the inefficiency. And the way that we created this candle here, we traded into the consequent encroachment of the 6-hour fair value gap. We respected it and we created an up close 6-hour candle. So it makes sense for us to have created a bullish candle there in that sense. So that's just another, like, I guess a caveat to this trade, right? It's very I guess that's just something that I did want to point out. So going from the hourly model, I have to find some sort of entry pattern now, right? So I go on to the 15-minute. I'm thinking, okay, is there going to be some sort of 15-minute fair value gap? And turns out there was. There is a 15-minute fair value gap right here, and it's a gap that could be rebalanced, right? Because of the way that we created this 15-minute fair value gap here. I can't necessarily zoom in here, but we did close below the second fair value gap's candle's high with the third fair value gap candle's creation. And one thing to point out is that we had a market structure shift, right? We created this leg down. We traded up into a 30-minute fair value gap, and then we continued lower. This, to me, this swing high should not be broken if we're going to maintain bearishness, right? So whenever we break past this 30-minute swing high, that's considered a 30-minute market structure shift. And one key thing to note here is that we created this, the way that we created this 30-minute fair value gap right here. So notice it's a little bit different than the 15-minute fair value gap that I used to enter. The way that we close here on the third candle suggests to me that we're going to treat this 30-minute fair value gap as a breakaway gap. Reason being, the second fair value gap's candle's high we closed above that with the third fair value gaps candle's closing price. So this gap should be treated as a breakaway gap, meaning prices shouldn't trade back into it. So it's a reasonable spot for me to have my stop loss. And now going back to the charts here, let's take a look at what's happening. So, I mean, we still have about 30 minutes left, but it's still looking like the 4 hour and the 8 hour. It appears to me that we're most likely going to take out the 4 hour / 8 hour high. And if I'm anticipating the 4 hour and the 8 hour high to be taken, I'm going to be bullish coming into this morning session. But yeah, so going back to the pros and cons here. Like I said, understanding time frame alignment. What I just went over there was basically time frame alignment. And third thing, being able to remain and practice patience, right? Whenever the conditions in the markets isn't exactly favorable, you have to sit on your hands. You can't force a model to present itself, right? You can't force anything onto the market because you're not in control. What is in control though is how you're going to execute your strategy and how you decide when to not take a trade. And the only thing that you should be keeping in mind of, and that should be on your mind, is that how are you going to execute your strategy? What is your strategy, right? Implementing the strategy is more important than the outcome of the trade. And some things that I can work on coming into this week. And both of these here, to be honest, they're a little bit more, they're not necessarily trading related, but I believe that if you're going to be a disciplined trader, you have to be a disciplined person, like in real life too, right? But yeah, so aligning your thoughts and your actions with your goals and values. So practice mindfulness, right? Be constantly aware of what you're doing, what you're thinking, and what you're going to say. And like a question that you should ask yourself is this current thought or is this current action going to benefit me in any way in the future? How are you going to spend the limited amount of energy that you have per day? Is it going to be spent on games? Is it going to be spent at work? Is it going to be spent at school? And all of those answers to those questions is, what do you value? And after you're able to identify what you value, then you're able to come up with some goals. And after you create those goals, you can create a objective list of how you're going to complete those and accomplish those goals. Second, not comparing yourself to another. And this is something I have to work on here, personally here. So both of these things I have to work on. So maintaining that focus to where you're not able to compare yourself to another. You don't have to feel rushed, or you're not going too slow. That's all up to perspective. But yeah, that's some of the things that I could work on and some of the things that I should be continuing to do. So going back to the charts here, we're about to close here in about 10 minutes, so I do want to be present here for this morning. But yeah, coming into the 10 a.m. candle here, like I said, if we were to close right now on this 4 hour and 8 hour candle, I would anticipate for us to take out the 4 hour slash 8 hour candles high, but anything could happen within the next 8 hours. So just be wary of that. Be mindful. However, one thing that I do want to draw your attention to here is that we actually have SMT here between NQ and ES at previous week's low. So NQ, we failed to take out previous week's low, whereas ES, we did take out previous week's low. So there's a bullish SMT here. And this low should be maintained if we're going to be continuing higher. To be honest, like I said, I was not anticipating this, the way that we're going to open up here on this week. Just cause like with the gap down, no one could anticipate a gap down randomly, right? But like I said, I believe it's because we had tariffs. Yeah, we had tariffs on China, and I believe China retaliated with its own tariffs. And tariffs is basically tax on imported goods. I believe it's the whole, what I'm understanding here is that tariffs are paid. So if US increases the tariffs on China imported goods, right, into the goods that are coming into the United States manufactured by China, I believe that tariffs are essentially taxes that China has to pay. But I have to make sure. Let me make sure. So because Trump on China imported goods will Okay, so imagine you have a toy store that sells toy cars. Some of these toy cars are made in your country, and some of them are made in another country like China. Let's say the toy cars from China are cheaper than the ones made in your country. Now the leader of your country, let's call him Mr. T, wants to help the people who make toy cars in your country. Wants to help. So he decides to add an extra cost called tariff to the toy cars that come from China. This means that the toy cars arrive. When the toy cars arrive from China, the people who bring them into your country have to. But who really pays the extra cost? Well, the people who bring the toy cars from China might raise the price of the toy cars in your store. So essentially, both the producers and the consumers are going to have to pay higher prices for the imported goods by the other country, I guess. So when you or your friend wants to buy a toy car, you might have to pay more money than before. In simple terms, a tariff is a special fee added to the things that come from other countries. It's meant to make the things from other countries more expensive, so that people will buy more things made in their own country. But it can also mean that everyone has to pay more money for those things. the people or the importers. These are the businesses or companies in your country that buy products from China and sell them in stores. For example, if a toy store in your country wants to sell toys from China, they have to buy them from Chinese manufacturer. When the toy cars arrive at the port, the U.S. government charges a tariff extra fee on those toys. The importer, the company that ordered the toys, has to pay that extra fee before they bring the toys into the country and sell them. To cover the cost, the importer might raise the price of the toy cars, so customers, you end up paying more. So it's not actually, so it's essentially not China that pays. So it's just, so this could cause the demand for toy cars in China to decrease, which ends up hurting the Chinese GDP. Okay. Alright, going back to the actual charts here. Let's see. Like I said, with the way that we're about to close here on the 8-hour candle and the 4-hour candle, I am anticipating for the 8-hour/4-hour high to be taken. But the thing is, here on ES, notice how significantly behind we are, right? So NQ is relatively closer to its respective swing high than ES. I mean, ES could play catch up here and end up, catching up, but who knows? Anything could happen. But I would. If we complete the objective, the morning objective here, the 4-hour/8-hour high, if we take out that high without giving me a model and an entry pattern, then I'm just gonna close the charts. But yeah, we'll see. I believe NQ is probably going to take out this swing high here, and after we take out that swing high, that's when you don't want to force anything, because then there's going to be some sort of SMT, right? Because ES has failed to take its swing high. If ES fails to, then that means there would be some sort of SMT indicating manipulation in the markets. And manipulation, just in general, is something that you don't want to be a part of. So let's see here. 20 seconds left. 15-minute time frame here on NQ. We're expanding. So here, if we take out this swing high here within the next, so that was the 4-hour/8-hour candles high. So here you guys can see we have completed that 4-hour/8-hour objective. And after we take out the 4-hour/8-hour objective, we did take out that swing high like I was pointing out. So look, ES has failed to take out its respective swing high. So now there's SMT divergence. Here is a good time to practice patience. There's no need for you to force anything here. All you have to do is simply just wait for another opportunity, and maybe today might not be the day, tomorrow might not be the day, and even a week has passed and you might not have been given a opportunity. That's completely fine. You just have to be able to practice the patience, right? So to finish off the pros and cons and the improvements here for next week, this week I can continue to practice to take consistent models, right? Even if there's no model that presents itself, as long as I maintain that consistent requirements for my trades, then I'll consider that as a win. And that is a win, right? If you're able to remain disciplined and patient and requiring a higher time frame objective, a model, and a entry pattern for your trade, that's all I need to take a trade. But sometimes it might not present itself, so that's completely fine. And whenever those components are met, right, don't be hesitant to take the trade. To actually take the trade. Be confident in your strategy. Recognize that it's going to be it's a long-term game here. It's not a short-term game. And like I said, consistency is only going to benefit you in the future. And second improvement here, properly aligning time frames. You know, like I showed you guys in the example, wait for time frames to align itself, right? If the lower time frames aren't aligned with the higher time frames, all you have to do is wait. And once those two time frames, or like let's say the hourly time frame is now in alignment with the 6 hour or the 4 hour, then you have yourself alignment, right? You don't need to feel forced to do anything here. Just remain calm and objective, and view prices as information, right? It's simply information, and information you can't interpret information as bad or good. It's just simply information. Practice mindfulness, like I said, be constantly aware of your thoughts and your actions. Is this action going to be is going to be benefiting me in the future, right? Is the future me going to improve or level up with the thought and the action that I have right now? Last thing is aggressive trading. So with that, I do want to go over one of the trades that I took last week here with you guys, just so I can kind of break it down how I view prices, right? So starting off with the 2-day time frame here, on this specific trade, this is going to be my higher time frame objective, right? So the 2-day time frame here, with the way that we close on that candle, the bare minimum that I can anticipate is for us to take out the 2-day high. So if that's what my buys coming into the next 2 days is, so I want to be looking for a bullish model, right? So to align myself with this 2-day time frame, I notice, okay, this daily candle here is suggesting to me that we're most likely going to take out the daily high. But notice how the daily high is completely different from the 2-day high. So that means that there's a time frame alignment, right? That we should expand higher after we take out the daily high towards the 2-day high. So it, like I said, it just goes back to that idea of time frame alignment, right? The daily time frame is in alignment with the 2-day order flow. Both of those time frames are suggesting higher prices. So now that I have a higher time frame objective, I have a model which is on the daily time frame, but the daily time frame the daily high is also the same high as the 4-hour high. So that means we should complete the daily objective within the next 4 hours. So for me to be a part of this trade, I go from the 4-hour model to the hourly time frame, and I notice, hey, this hourly fair value gap should be respected if we're going to be trading in accordance with the daily time frame and the 2-day time frame. So I take my entry at the 1-hour fair value gap, and we do end up taking out the 4-hour / daily high. And that's basically what my trade was. It's pretty simple. After we complete the daily / 4-hour models objective, so after we take out the daily high, I move my stops to break even, and I let my runners run towards the 2-day high. But that's essentially how I view prices. It's very easy approach. It's just you have to be disciplined enough to wait for the opportunities that present itself, right? So to finish things off here for today, I do want to go over a quote here. So today's quote is by Seneca: "We suffer more in imagination than in reality." Breakdown of this quote. Fear is often worse than reality. Most of our anxiety comes from overthinking and imagining worst case scenarios. In reality, challenges are rarely as terrible as we make them out to be in our minds. Control your thoughts. Stoicism teaches that external events don't harm us. It's our perception on them that does. So, are you going to view the glass half empty or half full? Life is all about perception and perspective. How are you going to view things? In a positive light or in a negative light? By training our minds to focus on what is real rather than what is feared, we gain peace. Face life as it comes instead of wasting energy worrying about things that may never happen. Deal with problems only when they arise. The present moment is almost always manageable. And a reflection question that I should consider myself is: what fears or worries are you allowing to control your mind today? And how can you shift your focus to reality instead? I guess a fear, or a worry. I guess you could say like landing a finance internship. That's something that I want to be able to accomplish. But that's like the way that I've been approaching this is that I can't control whether or not, well, I guess I have some input that can increases the chances, but I don't have actual control over whether or not I land a internship or not. The only thing that I can control, however, is the amount of the quantity of the applications that I sent out, the quality, how hard am I trying to get an internship, right? It's those are the things that you should be, considering. You shouldn't think too much about things that you can't control. Like I said, it's a waste of energy. There's no point in thinking of things that you can't control. So reflection question. And with that, I am going to wrap up today's live stream. I have to get going soon, so thank you guys so much for tuning into today's video, and until next time.